Welcome to a podcast about wealth and life. We all know that our finances play a big part in how we live our lives. In this podcast, the advisors from Foster Motley share insights and information about investment and financial planning topics and how they connect to your life.
You think your investments are doing well, or perhaps you think they are doing poorly. But compared to what? Foster Motley's Thom Guidi is with me, Patrice Sikora, to talk benchmarks and how they can be used to measure investment performance and even people. Thom, let's start with the definition. What is a benchmark?
Yeah, thanks, Patrice. It's great to talk to you again today. Benchmark is for investments is something that you can measure your performance against. So everybody has, or people who have an investment portfolio, they might think it's been a good year because they earned 12% during the year. But if similar investments have done better, say 15 or 20, then maybe they're not keeping up. Or conversely, they might think it's a bad year because they lost 5 or 10%. But if other investments have done worse, there's still some value to those investments.
Now, we just mentioned looking at your investments to measure whether you've done better or worse than others. But what about people? How can we use a benchmark to evaluate people?
Okay. So if you're hiring somebody to manage your investment, that's one way to evaluate how that person is doing managing your money. You also have to evaluate yourself. So if you're managing your own investments, you manage your own performance against a benchmark. So I think it's good at this point to give a couple of examples of benchmarks so that we're more clear. So people hear about stock indexes like the Dow Jones Industrial Average or the S&P 500. Those are well-publicized indexes. You might even hear that in your local news, how the stock market did during the day, and they quote the Dow or the S&P or maybe even the NASDAQ's performance. So those are all U.S. stock indexes. Other types of investments, other locales of investments all have benchmarks as well. So there's real estate indexes or bond indexes, international stock market indexes, and they're all meant to reflect the performance of those markets. So if you're investing in U.S. stocks, maybe the S&P 500 is a good benchmark for you. But if you have a broader collection of investments, it's probably not served by comparing it to one index and using that as your benchmark, but by a collection of benchmarks.
But Thom, too, should you be doing this on a day-to-day basis? Come on. I mean, we're talking long-term investments here, really?
Yeah, I mean, that's the difficult thing is how long-term is long-term. And if you look at it on a daily basis, look at your portfolio on a daily basis, is it particularly helpful? I think it's probably a good idea to take a look at this information, if you can, on a yearly basis. I think that would be certainly a good cadence for most individuals reviewing their portfolio. Maybe a little bit more often, but for most, once per year would be a pretty good cadence or frequency to review performance and look at that performance as compared to a benchmark.
And your investment manager, they can help you understand what's going on, correct?
Yeah.
They should be able to, yes?
They should be able to. I think the comparison to a benchmark serves as the opening to a conversation. The conversation is why did we do better or worse than the benchmark? Why are we doing good or bad on an absolute basis too? Absolute basis just meaning why do we have good performance this year or bad performance, positive or negative? But that serves as an opening to that conversation. And there should be a reasonable answer as to why. So even if you have bad relative performance, bad performance compared to a benchmark, as long as it's consistent with the investment strategy, you're willing to accept that because maybe down the road there'd be good performance later. I think it's still a reasonable thing. And that's why we have these conversations, so that there's some level of comfort as to why we're doing well this year or bad last year. And I'm not saying this is actually what we have done here at Foster Motley. I'm just kind of in a general sense, still relevant in 2027 if somebody listens to the podcast.
But then how about the investor who says, well, I don't need someone else to help me interpret this information. I can go to a website.
Yeah, and that's valid. You can compare your account versus other benchmarks. It's a little difficult if you're, say, an individual stock investor managing a portfolio. Custodians to date, I don't think give great performance presentations, accurate performance presentations. So you couldn't say log in on December 31st before you go to the New Year's party, check out how I did that year and compare it to the S&P 500. The custodians, being companies like Charles Schwab or Fidelity or Vanguard, to date, I haven't seen a good, accurate performance presentation from a custodian, probably for a variety of reasons. Now, what an individual can do is if they invest in mutual funds, the mutual funds provide accurate performance. You don't have to do it at 5 p.m. on December 31st. You could wait a couple weeks later, log in to or go to a website like Morningstar and type in the different mutual funds that are being used, and they would have performance for last year and for prior years. They would have benchmark performance. So an index that looks like that mutual fund's performance, and you could compare how they've done to a benchmark. And then you can evaluate, does that index, or excuse me, does that mutual fund still make sense in my portfolio? Or is there a better alternative?
What does Foster and Motley do? How do you calculate performance?
Yeah, it's a good question. So every day we get the transactions from the custodian. So we get all the data coming from, we use Charles Schwab primarily. And operationally, we review those transactions. There's some corrections, unfortunately, that have to be made. So it is a job to kind of rectify that data and calculate performance from that data in what's called a portfolio accounting system. And if you have good data, which takes some work, but once you have the good data, you can calculate performance on a daily basis. You can compare that performance against an index. And the way our benchmarking works is for bonds, we use a bond index. For US stocks, large and small, we use different indexes. For international stocks, we use an index. Real estate, we use an index. And we create a custom index that looks a lot like a client's account. So we can compare their portfolio's performance against, we'll call it a blended benchmark, a blend of indexes that looks a lot like their portfolio. Now, our performance presentation, the way we help clients compare their portfolio against a benchmark, it includes year-by-year performance. So if they've been a client for 5 years, they'd see 5 separate columns for their portfolio versus a benchmark, as well as year-to-date and since inception. So going back for the whole history, how have they done on an annualized basis compared to their benchmark? So that's a pretty fair comparison for their portfolio versus a set of indexes, a set of averages. And like most investors, we can't, or all investors, we're not going to beat the benchmark every year. There's going to be some years we're going to do better. There's going to be some years we're going to do worse. But having that performance presentation helps with that conversation that I alluded to earlier, where we can talk about how is this portfolio helping you meet your financial needs in the future? And how is it structured to do that? And we can talk about, well, if it's been a good year, why is what we're doing in style right now? Or if it's been a bad relative year, bad compared to the benchmark, why is that style still important? How is it different? Are we being consistent?
Discussion and information.
Absolutely.
All right. Thom, how can listeners reach you if they want to discuss and get more information?
Well, Foster and Motley, our phone number is 513-561-6640. You could ask to speak to one of our investment managers to talk about how your portfolio is performing and how performance comparison against benchmarks can make sense for you. You can also visit our website, www.fosterandmotley.com, all spelled out.
Thom Guidi, investment manager at Foster Motley, thank you so much for all your insight. And for more information, follow this Foster and Motley podcast about life and wealth, and please rate and review. Of course, also share with others.
Thank you for listening to Foster and Motley, a podcast about wealth and life. Click the subscribe button below to be notified when new episodes become available. The information discussed and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Foster and Motley. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional financial advice. Keep in mind that rules and regulations are subject to change. Always seek the advice of your financial advisor or other qualified financial service provider with any questions regarding your financial planning and investments. Foster & Motley is not affiliated with any third-party providers. Any mention of a third-party provider does not imply an endorsement of that provider. If you decide to utilize a third-party provider, you do so at your own risk.